Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold. ICE Brent crude oil futures. An immediate countering bullish harami yesterday after the previous session's combined key reversal down and bearish engulfing pattern, though the market still made new lows not seen since late June. Prices pulled up and closed over the May 2019 high at 73.38, which had earlier last week held up prices and which is deep in the heart of congestion from May to June this year. The next overhead resistance is the April 2019 high at 75.58, which the market did not attempt. Overall, there is a number of patterns operation, quite a large number actually, all at the same time. We have the big old three-gapping move lower from the heights of late September to the end of November. Then there is the mid-October to date bearish halfway hesitation pattern. That's not a great example of one, but still valid, with potential down to the 71 even zone. Next, there is the immediate pattern of a possible late November to date bear flag, though this may be turning into a mini diamond pattern. This is forming actually at the moment, but the bear flag might have potential down as far as the 68.5 zone below, though it needs some work on it to ascertain if it is true. There's also the big late July to early November lopsided head and shoulders top pattern with a secondary target X potential down in the 69.90 zone. Finally, there is the big late September to date bearish shift pitchfork, highlighted in purple on my daily chart. This pattern has guided the market down effectively since its start, mainly between the lower time below, currently at 71.46, and the middle time above, currently at 77.87, and continues to do so. So far today, a follow-on higher to yesterday's bullish harami, indeed a gapping move higher that has since been filled in. However, the move up has so far stalled at the April 2019 high at 75.58. Below, the combination of the September 2019 high at 71.99, the 2020 high at 71 3/4, and the lower time in purple are providing an increasing zone of support for the market. Spot gold. A significant combination yesterday of a key reversal up and a bullish closing long white Maribozu, which was based on the important recent 50% Fibonacci line at 1972. Now, I highlighted this 50% Fibonacci line yesterday as being important, as it was not alone, as just below we have the November 2020 high at 1965. Then the combination of the 2021 high at 1959 and the rising short medium moving average, currently 1963. And finally, the slowly rising long moving average, currently at 1955. Overall, the market made a good impression of heading lower from the recent August to date ascending wedge pattern, currently 2039 to 2057, which is highlighted in dark blue on my daily chart. But as I said yesterday, and I quote, I am still cautious about the break lower, as it is still close enough to be classified as a possible false break, so please be aware, end of quote. Now, so far today, a further attempt higher up to the broken lower trend line, highlighted in dark blue on my daily chart, of the August to date ascending wedge pattern, and by doing so puts late last week and earlier this week's actions into the category of a false break. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.